Thank you for stopping to watch my video. I want to teach this to as many U.S. investors, business owners, entrepreneurs, franchise owners, and 1099 income earners to how to save taxes legally. Let's start off with 3 simple questions. Number 1, do you want to leave a legacy for future generations? Number 2, do you want to save U.S. taxes legally this year, next year, generation after generation? And number 3, do you want to learn the secret of the rich? If you said yes to all 3 questions, you're at the right location. So few people have ever heard of the Spendthrift Trust. It's legal. It's in IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions, and both times the Supreme Court has favored it. You can't get more legal than this. Again, it's Tax Code 643B. Please Google that. You will find an opinion letter dated September 11th, 2018, from the IRS saying they don't like Tax Code 643B. That's okay. They can't change it. Only Congress can change it. But I work on behalf of a private law firm that has a copyright on the Benson Financial Trust. Paul Benson was a Harvard law professor. 76 years ago, he wrote 5 specific trusts to save specific money. Today, we're going to discuss 2 of the trusts and give you a little bit of history about myself. In 2019, I wholesaled 7 properties nationwide and paid off $184,000 in debt. Woo! I was a rock star in my real estate group and completely debt-free. I knew about capital gains, and I had $50,000 sitting in my bank account. What I didn't know was my tax bracket went from 22% to 24%. If you're unaware, there are 7 different tax brackets from 10% to 37%, depending on how the more money you make, the more money you pay. And there's 4 ways to file your taxes. Single is the most expensive way, head of household, married jointly, cheapest way, and married separately. My tax bracket, I found out on April 4th of 2020, I owed the federal government $97,000 in short-term capital gains. Yikes. Remember, April 4th, 2020 was the start of COVID. 3 of my properties didn't pay me April 1st. My CPA set me up on there's a cat bothering me. Sorry, not my cat. I've got family visiting. I have, he set me up on a payment plan. I took a HELOC out on my house and paid off all my taxes. I started researching the Rockefellers Spendthrift Trust. It's called The Office. It's been around for 7 generations and has almost 400 people in it. If they can save taxes, Sally can save taxes. My name is Sally Gimmon. I'm the owner of thetrustisyou.com and a free class on the Great Discovery, www.sallygimmon.com. When you go out there, you'll get a 23-minute presentation. You'll get 3 articles from Forbes magazine, 2 pages of case law so you can research this, and a chart showing that if you're filing single, the most expensive way, making $80,000 a year, how much you'll save taxes in all 50 states. Woo! I'm going crazy. So let's get into this. The trust is going to save you in 4 different ways. Doesn't matter which of the 5 trusts you get, but you're going to save taxes year after year, generation after generation. Number 2, you're going to keep your information completely private. I'm a real estate investor. I was told to get an LLC for each one of my properties. I was not told that anyone can go to the Secretary of State or the Corporation Commission and research all LLCs, S Corps, and C Corps, and that 40% of them get sued every year. Yikes. Number 3, talking about lawsuits. All lawsuits become frivolous and go away. So if you have a rental property and the renter's dog gets out and bites the mailman, they can't come after the owner. They can only go after the people renting the house. And number 4, if you're not aware of the Corporate Transparency Act from the Treasury Department, you have until December 31st, 2024 to do the paperwork, or have the Spendthrift Trust and not worry about it because you're exempt. It's an amazing thing. So, my story, I started researching this, and the first house I put into the trust was a bank-owned reverse mortgage that I paid $20,000 for. I had to wait. I knew it was going to go for $50,000, but we had to wait until COVID restrictions got lifted. So on August 28th of 2021, it went to auction and it sold for $64,326. Woohoo! I'm a rock star. Without lifting a hammer, I made $44,326. At 24%, that means I saved $10,368 that I didn't have to pay in capital gains and could reinvest it into more property. So, with the beneficial trust, you're going to save the following 5 taxes. You're going to save short-term and long-term capital gains. Short-term capital gains are just like federal income taxes, between 10% to 37%, 7 different layers. So if you're selling crypto, if you're a forex trader, if you're a wholesaler, if you're a fix and flipper, doing auction houses or tax liens, you could be saving thousands of dollars. Long-term capital gains are a year or more and are either 15 or 20%. So if you sell your business, sell an investment property, or a baseball card, or anything at a profit, you would pay that. There is past legislation. It'll be interesting if President Biden signs it or if President Trump signs it to say that if you make more than $300,000 a year, your capital gains will be 40%. 40%. Yikes. Interest income taxes. Again, tax just like federal income taxes, between 10% to 37%, 7 different layers. This is for passive investors, people in mutual funds, in a Riich. If you're doing subject to real estate, the BRRRR strategy, I personally have notes where on the mortgage, people pay me either rent, creative financing, or seller financing. You'll save dividend income taxes. So if you're in the stock market, a day trader, if you are doing options trading, futures trading, commodities, or you're living on dividends, you can save those taxes. Rental income taxes. Yes, you can take depreciation. Yes, you can do cost averaging. But remember, your information is private and all lawsuits become frivolous. So if you have short-term rentals like Airbnb or vacation rentals, 5 doors, 10 doors, 20 doors, multifamily, apartment buildings, commercial property, or you're doing arbitrage, rental arbitrage, or Airbnb arbitrage. And finally, royalty income taxes. They're a little bit less. They're between 10% to 35%, 7 different layers. So if you're in the NFT world, if you're an actor, an actress, an author, an artist, maybe you have copyrights, patents, or intellectual property, you could be saving these taxes year after year, generation after generation. That's the beneficial trust. The business trust is for all U.S. business owners, entrepreneurs, 1099 income earners, and franchisee earners. You will save at least 90% on your federal income taxes yearly, and in 43 states no longer pay state income taxes. It's an amazing thing. To give you an example, some of my clients who are saving thousands of dollars, I have a real estate agent. Just on one house, she saved $5,022 in federal and North Carolina state income taxes. I have a business coach out of Indiana who's saving $58,726 or an extra $4,893 per month, not working harder, longer, or smarter. Well, I guess smarter. He has a business trust. I want to teach this to as many U.S. business owners, entrepreneurs, franchisee owners, 1099 income earners, and U.S. investors. I have a free class on the Great Discovery. When I repost this, I'll have the information there. But if I can help you save taxes, please set up a 30-minute tax breakthrough session with me. I'll take you out to NerdWallet to show you the formula for federal taxes, and then we'll discuss what's best for you. Thank you for watching my video. I hope you learned something new. Start saving just like the rich do. Take care. I hope you learned something new. Start saving just like the rich do. Take care.